In this video, we will be walking you through how to use the New York City mortgage recording tax calculator available at Hauseit.com. If you're not already on this page, you can get here by navigating to the Hauseit website. Spelling is up here. Click on Calculators, go to the Buy tab, and click on New York City Mortgage Recording Tax Calculator. There are a number of other calculators here. If you are thinking of buying, if you're buying something above $1 million, you might want to look at the mansion tax calculator. The mansion tax was updated in 2019, so there are some different rates as opposed to it being just 1% in the past. You can also use the buyer closing cost calculator, which provides a full breakdown of all of your buyer closing costs. And there are a couple others as well, such as mortgage affordability, home affordability, trying to figure out what you can afford based on your income. If you're buying a co-op, you can also figure out what you can afford based on the co-op's financial requirements. There's also a purchase CEMA calculator. That's a nifty trick for saving some money on your mortgage recording tax if you're buying a condo or a house, so feel free to check that out as well. So going back to the mortgage recording tax calculator, the first thing we should talk about is what is the mortgage recording tax, who pays it, and why. So the mortgage recording tax is actually a buyer closing cost. It applies to the purchase of real property. So real property is defined as being something with a deed. So if you buy a condominium, you have a deed to your particular apartment. If you buy a house, you have a deed as well. So that is real property. The same goes for land. Now, a co-op is not real property. So when we're talking about the mortgage recording tax rates, it actually means that the buyer for a co-op does not have to pay the mortgage recording tax. So that means that buyer closing costs are significantly lower for co-ops compared to condominiums. As a quick example, let's say you're buying something that's $1,025,000 and you're financing 80%. If you're buying a condo, your closing costs are around 4%. If you're buying a co-op, your closing costs are under 2%. So a little less than half. And if you look at the breakdown of the closing costs, specifically the financing related costs, if you look for condo, you see this massive mortgage recording tax line item of 1.54%. If we switch to co-op, that is no longer there. So the mortgage recording tax is a huge closing cost, and you don't have to pay it if you buy a co-op. Now, the downside of buying a co-op is there are customarily restrictions on how often you can rent the apartment. If you're not living there, they might not allow it at all. It's also more challenging to buy and sell given the board's ability to reject a buyer, presumably on financial grounds, but in reality, they don't have to specify why they reject a buyer. So aside from those hiccups, a co-op's a great deal. You get more for your money, you get more space, very affordable, and of course, your buyer closing costs are lower. So in terms of the mortgage recording tax calculator, important to note that the tax is based on the loan size, not the purchase price. So if you're buying a $1 million property and you're putting down 20%, means your loan size is going to be $800,000. If it's a condominium, you would be paying 2.175% in terms of a total mortgage recording tax. The rates are here, so you can see there's basically three rates. You have a loan balance under 500K, and if a loan balance is under 500K, regardless of property type, as long as it's real property, the total mortgage recording tax is 2.05%. Now, we've broken this down into lender pays and buyer pays, because usually the lender will cover 0.25% of the mortgage recording tax. So in theory, the buyer pays 1.80%, and again, it's on the loan balance, it is not on the purchase price. That means the more you put down, the less you finance, the lower your mortgage recording tax bill will be. Going back to the buyer closing cost calculator, we can actually test that out. So if you go to 90% financing, for a condo, you're going to see that your total closing costs are 4.2%. If we go to 80%, we go down from 4.2 to around 4. We go down again, and we go down again. So you can clearly see that the more you finance, the higher your buyer closing costs will be for condominium as well as a house. The other two mortgage recording tax rates are 2.175% for loan balances of 500K or more for condos and 1 to 3 family houses. Again, in this example, the lender is going to pay usually 0.25%, and the buyer will pay 1.925%. The other tax rate here is for other property types. Now that does not include co-ops. Remember, the mortgage recording tax is only for real property. So in this case, other property types is actually referring to commercial deals as well as residential properties with 4 or more units. So, if you're buying a townhouse in Bed-Stuy and there's 4 apartments in that townhouse, you would presumably be paying this higher transfer tax rate of 2.80%. Now, generally speaking, for commercial deals, the lender does not chip in and pay that 0.25%. So in theory, you're going to be paying 2.8% on the amount of the loan, but it is always a good idea to double check with your lender for an exact breakdown of what they'll pay, what they may pay, and what you'll need to pay. So going back to the calculator, we'll do a couple examples. If you're buying a property and you're taking out a $1 million loan, you can see here that the mortgage recording tax is 2.175%. Buyer pays this percentage, lender pays this amount. So, you would pay around $19,000 as the buyer on this size loan. Now, if we switch it to 1 to 3 family house, you're going to see that it doesn't change because it is the same sort of category here as it relates to condos and 1 to 3 family houses. Now, if we switch it to 4 or more family houses, you'll see that the rates do go up, and that's because we would be entering this third category, other property types, where the total tax is 2.8%, and in theory, the lender doesn't necessarily chip in anything at all. The same goes for commercial real estate. The lender is not going to pay anything. Now, there is a bit of a distinction here. So for 4 or more family houses, we have put that the lender pays 0.25% on residential. For commercial, they almost certainly don't. In this case, you would be encouraged to just double check with your lender just to make sure. So you can also email the calculator results to yourself, to a friend. You can print out a PDF as well. And if you have any questions about this, feel free to leave a comment below. The overall purchase process can be a little bit confusing in New York City, specifically because closing costs have in the past been a bit nebulous, confusing, but hopefully by using these tools, you're able to really itemize and figure out your true closing cost bill, what is your true affordability, and it will help you make a more informed decision. Also a reminder, if you do want to try to reduce your buyer closing costs, you can consider requesting a buyer closing credit. So you can learn more about that by clicking the link here, or you can go down and click on the Learn More just below this calculator here. Good luck with everything, and we hope to work with you at some point in the future.